Hello, everyone. This is Benga Olatuji, your mentor. Today, I want us to look at something we call the multi-time frame analysis. Many do not understand that it is not every time frame that you can actually um, buy from or sell from. The fact still remains that you can. There is no dispute to that. But for the fact that you want to enter the trade, let's say you want to buy or you want to sell, you want to enter at the earliest possible time when to make better profit. Imagine entering a trade late when others are already making money. So that is one of the thing we look at when we are talking about multi-time frame analysis. Another thing that multi-time frame analysis does is you'll be able to pinpoint the direction of the market. Okay, let's say you're looking at higher time frame, you pinpoint the direction of the market. Okay, this market, I think it is heading this to this particular place. I think this market is bullish, but then I can still try to sell to this position. You can only be able to make all these decisions when you are looking at different time frame. I see that Euro AUD is bullish on, let's say, the 4-hour time frame. But for it to continue buying, market will not just be shooting up. It will have to retrace. Probably I'm someone that trades reversal. I'm now trying to catch a retracement into the next support, to continue the buy. So it is only going to be possible when you are looking at different time frame. But one of the major thing we use multi-time frame analysis to do, which we're going to focus on in this lesson, is to take entries. Okay, if you're looking at higher time frame, remember higher time frame to me might not be the same as a higher time frame to you. For a long term trader, higher time frame to such person is a 3 months candlestick, the monthly candlestick, the weekly. Lower time frame to such person might be the daily candle and the 4-hour time frame candle. You get me? But for someone that is a day trader now, probably their own higher time frame is the daily, the 4 hours, the 3 hours, and their lower time frame is 30 minutes, 1 hour. For someone that is a scalper or a short term trader, their own higher time frame might be 30 minutes, then lower time frame 5 minutes, like that. So, but you must actually be able to look at different time frame and take decision based on that. So let's say I have a support zone. I have this kind of support zone, and let's say this time frame, let's say it is the 4 hour. Okay, this is a 4 hour time frame, right? Now the market has been doing this, so it started doing this, saw a reaction from here, it started buying again, it came another time, right? So I'm expecting that if this market, let's say the market is currently here, I'm expecting that if this market should try to retrace back into this zone, I'm going to take a buy. That is definitely what we all do, taking a buy from support and then you sell from resistance. So the market is now coming down here, coming down. Immediately it touches this place, you want to take a buy, but there's something we call candlestick confirmation. You want to see a candlestick confirmation. Let's say you are hoping to see a bullish candlestick. Let's say this is a sell candle. Let's say this is a sell candle, right? Then this other one is a buy candle. Let's use a blue color for it. We'll still look at the proper chart. So immediately we enter here on 4 hour. I'm waiting for a bullish engulfing candlestick, right? This is what we expect. So once I see a bullish engulfing candlestick, then I'm going to do what? Click on a buy from here, place my stop loss somewhere here, and then I'm going to hope that this market is going to hit my take profit right here. That is what we do. But do you know that it means you have to wait 8 hours for these two candlesticks to form? One will take 4 hours, the second one will take 4 hours. I've identified on the time frame that this market is bullish, right? This is the 4 hour time frame, and I'm waiting in this zone to take a buy from there. Now, using multi-time frame analysis, you can actually go to a lower time frame. Let's say what is happening right here, this same line, this same support zone that I have, let's say I'm seeing it on the 2 hours or the 1 hour, any lower time frame that you feel you pick entry from. So let's say this is what I'm now seeing on the lower time frame. Before this 4 hour candle finish forming, you might actually see something like this. On, let's say, 30 minutes, you're going to see something like this forming. Let's use this time frame as 1 hour. Let's say this is 1 hour time frame. 1 hour. Okay. So this is 1 hour time frame. All right. Remember when we analyzed, when we saw the buyers, we saw the zone we want to be buying from. It was from a 4 hour time frame. Now you now move and switch, let's say, to 2 hours, 3 hours. But for me, let's say I go to 1 hour time frame. On 1 hour time frame, it means I'm going to see 4 candles to give me this particular the single cell candle that we have here. Okay. Now let's say why the 4 candles were forming. Candle 1, the candlestick 1, 2, 3. Let's say the third one. Okay. Let's say this is the third one. This one that is currently forming is the third one. So when it formed, I now saw this particular candlestick pattern. This is a pin bar, a bearish pin bar. Let's say I'm seeing this bearish pin bar. Now, I would enter this trade immediately I discover this, because yes, I'm looking for a candlestick confirmation that is going to tell me to take a buy decision from this support zone. Remember, this support zone from 4 hours is the same support zone. We are not changing the support zone, but we had to go to a lower time frame, okay, to give us an early decision, to allow us to take a decision very early. It means after the formation of this is like after 3 hours. It means when you're looking at 4 hours, even the 4 hour candlestick is still yet to fully form. Talk more of starting with this buy candle. Now, let's say immediately I enter a buy from here. Immediately this finish forming, I'm going to take my buy from here, set a stop loss here, then my TP will be here. But what will happen is I would have taken an early entry before this person will take an entry. Let's say the next candle that formed was a sell, even though I've started buying, right? It will be running in negative. The next candle, remember the next, we've had 1, 2, 3, 4. It means 4 candlestick four 1 hour candlestick is going to give us 1 4 hour candlestick here. So this has fully formed now. Now remember that this one is a bullish candle. It means after the formation of this sell candle, we started buying. We continue the buy and we continue the buy. I'm already in a buy trade. 1, 2, 3, 4 candlestick. This 4 candlestick on the 1 hour time frame, I'm already in profit before this person will start, the trade. Before this person is going to take an entry. It means this person, if he switch to 1 hour, remember this is where we enter the trade from. If he switch to 1 hour to check his trade, this is where he actually truly entered from. Then he's going to continue the buy, probably put his stop loss here as well, because he's trading on the 4 hour time frame. Remember, his stop loss will be here. Now his stop loss is here, he's taking entry from here. It means me that I'm analyzing on multiple time frame, I would have entered this trade 5 hours earlier than him. You remember this is 1 hour, 2 hours, 3 hours, 4 hours, 5 hours. I've entered this trade 5 hours earlier than him, and I'm already running in profit. So that is what multi-time frame analysis, the advantage it can give to you. Now let's look at a live example. Now let's go into our chart and pick a live example. Okay, this is a 4-hour time frame. This is Euro USD. Looking at this, I have marked this support zone that yes, I want to take a buy from here because I was seeing reactions inside of it. It means immediately we enter this support zone again. If I see any candlestick that is going to tell me to buy, I will buy. And looking at this one, if you look at this, this is like a pin bar. You can call it a doji, even though it has a small body. But this is giving me a confirmation. So this is a long-legged doji. It's giving me a confirmation to take a buy. So it means I'm going to take a buy immediately this form after the close of this candle. Take a buy from here, right? Place my stop loss here, and then I'm going to try to take my profit, let's say from this next high. Yes, I'm going to make my money, right? Now let's compare this. Let's mark that candle, or we can also pick this candle or this one that we initially saw as the confirmation. Now let's look at this same candle on the lower time frame. This same, it took 4 hours for this single one to form. I would have gotten a confirmation if I should look at lower time frame. Let's check 2 hours. Now as multi-time frame, I'm going down to get a confirmation. Now look at the 2 hour. 2 hour is also giving us a bullish engulfing. You can see that it's still that candlestick that will mark something like a bullish engulfing. It can give us a confirmation. Let's say we look at 1 hour time frame. What is 1 hour time frame showing us? Now 1 hour time frame is actually not giving us too many things, but by the third candle, remember that these are the 4 candles, 1, 2, 3, 4, that were marked on that 4 hour. It means by the third hour, this particular one, this is a spinning bottom. I would have entered a buy, and now this is where I would take my buy. Remember this initial one on 4 hour, this was where we took the buy from. But for this one now, this will be where I will be entering from. Immediately this candle close, I will enter from here, put my stop loss here, then my take profit. I'm still targeting the same point, the same take profit. Now, what can you notice from my entry here? This one is giving us a 1 to 7 risk to reward. This one is giving us a 1 to 3 risk to reward. Because I had a better entry when I, used that multi-time frame analysis. I came to the lower time frame to get my entry. So I would have entered early. In fact, it is going to give you a better risk to reward when you are trying to take entries from the lower time frame, not to go to the lowest of time frame. I use 30 minutes as the lowest I can go when I'm trying to take trades like this. I've checked the 4 hour to confirm my bias that yes, this market is bullish. So even though it is the same market, the person that is waiting on the 4 hour time frame is going to enter late, whereas I'm already in profit before he could catch up. And also because I took my entry early, my stop loss is still at the same place, but it is actually very small when you compare it to someone that is taking the trade on the 4 hour time frame. So this is how you approach the use of multi-time frame analysis. Because you analyze and you took your bias, you decided that yes, this market is going to buy on the 4 hour time frame, on the daily time frame, or on the 2 hours time frame, does not mean you should take your entry on that same time frame. So you can actually go to the lower time frame and then wait for that candlestick confirmation, because you're already sure of this zone. You already had the assurance that yes, this zone has not been tested too much. We had this push the market upward, so it means that this support zone is valid. So you can go to those lower time frame and wait for your confirmation. Then you get a better entry compared to the higher time frame. So that is how you can use the multi-time frame analysis. So if you want to understand more about this multiple time frame analysis, you can as well watch our further videos that explain different modes of entering the market. And this multi-time frame analysis is one of those entry model when you correctly use them. So see you in the next lesson. Thank you.